don't want what we know out there.
How a person can go from really almost nothing to becoming a millionaire by owning rental properties.
He would always buy these flip houses, and I just remember thinking, this guy is crazy. Why would he buy that house?
In the past decade, there's been a huge surge in the peer-to-peer short-term rental market.
Become an insider. So you have to know the rules before you get the game.
Every second counts. So make every second count.
Welcome to the Real Estate Jam. Whether you're just beginning or the best of the best, we're glad you're here. We will share successes, failures, and strategies for the action-taking real estate investor. And now to your hosts, JD, Annabelle, and Melissa.
Hey guys, welcome to Real Estate Jam podcast. I'm JD, and I have a special treat for you. One of my friends and mentors. We got Edward Peugh. He is a real estate professional working out of the Charlotte market, and he brings a ton of value to everybody. So I'm really excited to have him on the podcast today. Ed, how you doing, my man?
So good, man. Thank you for the invite. I know we've been trying to connect for a little while to do this. So I'm just excited we both were able to find a slot in the calendar to sit down for a couple minutes. Thanks so much.
Yeah, no, awesome. I'm glad you were able to find a spot for us in between your other meetings. Ed, I'm sure that a lot of the people that are listening to our podcast know you from one of your many different social media presence. But really what I'm hoping is you could kind of introduce yourself to the people that maybe don't know you and kind of give a little bit of your background. And then I'm sure I'll have some good questions to ask. And
just the easy ones today. You agree.
Yeah.
You're just doing the softball ones. But I don't know. Our story kind of starts like this. So I was in the Marine Corps, and just like yourself, as someone who served, I began to look at an opportunity to create more wealth in my surroundings. And especially when you're in the military, you don't have, you can't just go work at Burger King generally. That's not actually an option for you. So you have to try and look at some other ways. And so while I was on active duty, I purchased the first investment property in about 2005. And really between, say, 2000, I got out of the Marine Corps, went to work in the civilian world. But between that time, say 2005 and about 2012, 2013, I kind of just done the whole buy a house, live in it for a time, move on to a new house, rent out the old house. So I think I'd purchased something like 5 or 6 properties during just that phase. But in 2013, a couple of things happened. One of which was we learned more about creative financing. And when I say that, I specifically mean lease options, subject tos, and owner financing. Those are what I refer to as creative financing techniques. And we learned a little bit about private money. In parallel with that, I became licensed in the state of North Carolina, and we began to package properties for these iBuyers. So Invitation Homes, American Homes for Rent, 7 or 8 others out there. And what that taught me was the underwriting of a property. So how to properly evaluate the cash flows that a property evaluates. And that relationship worked for a little while until we learned that basically we could take the models they had taught us and apply them more effectively because we could move more quickly and we were more agile than generally these large organizations are. So between 2013 to kind of today, we continue to operate our buy and hold business. We have done a number of creative finance structure deals. We've done land contracts, we've done sub-2s, we've done lease options, we've done it on multifamily, we've done it on single families, we've bought businesses with creative financing. So there's a lot of different things that kind of fall into all of that. But the majority of what the active time in my business today is spent on is operating our wholesale business. It's called CLT Buyers. And really growing the team there has been the focus of 2020 and should be the focus of 2021. And we're certainly excited about the growth and the momentum that the business is taking.
Yeah, that's awesome. And I think some of the first things that drew me to you, it was your your instruction on creative finance. I think that a lot of that was invaluable, and you really broke it down to a level that I could understand, and well, not just me, but anybody could understand, really.
I was going to say, JD, you're a sharp guy. you catch a lot, but I appreciate that. I really, one of the things that I believe, I came from a background of not having, the trust fund in my pocket, not having those things. And so what I learned was there are ways to structure and do deals that kind of don't require credit, don't require cash, and you can put deals together if you'll find ways to serve people and find solutions for their problems.
Yeah. So one of the things that we've ran into recently when I'm dealing with some of our older, more traditional investors is they can't see why creative finance options are a benefit, not just to the investor. Can you talk a little bit about how they actually can benefit the homeowner or the seller?
Yeah, I think, and of course, we always put out the caveat, none of us are tax professionals and all that stuff, and we're not giving legal advice. But one of the main things I think that homeowners miss when they're talking about, I want to sell my house for $200,000 as an example, depending on the situation of that specific property, they may have a tax implication of that sale. Receiving payments over time can actually help offset a large portion of those tax liabilities. And so when I'm talking with people, especially, the stereotypical tired landlord, I want to sell them first on the tax benefits. I want to sell them on the benefit of, look, you've had this property in your portfolio for say 15 years, 20 years, and you've received a cash flow from this property all that time, and you've kind of become used to that. Well, what if we could structure this in a way that I continue to give you some cash flows on that property over time? And I think there's just some category of people who are going to be open to that, and some category of people who are just going to focus on the dollar amount. And frankly, I may not be the best person to serve someone who's just focused on the absolute dollar amount. Ironically, I will just add one piece, which is generally in a creative financing approach, one of the ironic things is I can almost pay any price,
right?
Because I can pay your price as long as it's on my terms. One example we use to kind of exaggerate that point is any piece of property out there, I'll pay $1 million today if you'll allow me to pay $400 a month until paid in full.
Right.
Right. I mean, so I'll give you your price. Okay. You want $1 million? Sure. Have $1 million. I'm going to pay $400 a month until paid in full, for the thousands of payments that takes, or whatever the math is. Right.
Right.
So yeah, I think it's just one of those things where some people have a paradigm where they're never going to have that discussion. And for those who do have the discussion, you can often, pay more for it. You can often get them better value. They can take the advantage of some of the interest benefits. So there's a lot of reasons why I think it's really in the interest of sellers to consider these options.
Yeah, one of the things that I was running into initially was that I would make my cash offer first, and if that was too low, then I would come back and say, well, we could do more money, or whatever, on different terms, and here's what it looked like. And what I found is that if I made my cash offer and it was too low, insultingly low most of the time, first, that the owner finance option was also, or the creative finance option was also off the table. What I found is if I started talking about the owner finance stuff and really educating a homeowner on it first before we put real numbers out there, I tend to have at least and maybe they're just pulling the wool over my eyes, but it seemed to me like they entertain it more often, and I typically get more owner finance options. Do you have any either recommendations, or how were you guys doing it? Were you presenting one offer and then going to the next, or was it all a package? What did that look like for you guys?
Yeah. So just for those who are listening to the podcast, I should mention, I happen to be licensed in North Carolina. So one of the options we can always put on the table is that we can potentially list a property. So just like that may be a tool for some of the audience, but it may not be a tool for others. But I think your progression of either you throw out the cash offer and anchor them low, and then walk back with language like, just like, let's use some numbers. So if the house is $200,000 house. I may throw out a cash offer at like, it's in good shape, so 120,000. And I may say, look, I understand that that's really not, you guys are looking for something stronger. You're looking to get closer to that market number. And I think I can get there. I think we just would have to really structure the way that we make those payments to you a little differently. And so if you're going to do that, if you're going to do like the low anchor and then come back, I think it's important to use language that isn't confusing to the seller.
Right.
Like very rarely will I use like these crazy investor terms like amortization or even interest rate for that matter. I'll simply say something like, well, what if we made, like give the 120,000 as an example. Well, what if we made $800 payments a month for 360 whatever it comes to.
Right.
But like it infers an interest rate. There's an inferred interest rate in there. But I just would say like, what if I paid this for this period of time? That's a concept that the seller's going to be able to get behind. So I think one of the things I would suggest is to simplify it. But coming back to like where your question was, which is like, well, what if I took the opposite approach, which is like, let's just start high. So you're having a conversation and you ask them, what do you think you might get in the market? And they say 200,000. Okay, what type of repairs do you think the home might need to get there? And it may be substantial, it may not. We've done creative finance deals that turned into wholesale deals to us where we didn't put $1 of rehab in the property. And in fact, we had one, and I can, maybe if we have some time, I'll tell you about it, but we actually got paid at closing from the sellers just to take over their property. But you can start at a number, say like 200,000, take the repairs, give them a look. If I was going to be at that number, I think I'd have to, subject to tends to be the lever we're pulling most often these days. So, okay, if I'm going to give you, $160,000 on your $200,000 house, you're going to be walking away with about $20,000, right? Yes, that's right. Okay. Probably I can't bring all of that in cash. That wouldn't make a lot of sense to our business, but I definitely can give you the 20,000. But what we would end up doing is keeping the mortgage in place over time, and we become responsible for those payments. And then I'd start selling on the benefits,
Right.
which is like, but what's great about that is for every payment I make for money that comes out of my bank account, your credit report gets reflected as an on-time payment. And you guys are going to be able to avoid, whatever pain they're experiencing. The house is in foreclosure or vacant or tenants or, whatever the pain point that they've mentioned to me. But so I don't know. I think you can walk either way. I don't know that I have a feeling that one is better than the other. I guess more broadly, my point of view is I don't think that people need to be that evasive about actual market value of properties.
Right.
Like sellers are reasonably informed these days. They have tools they can look at. They can look at Zillow for as inaccurate as it is. They can look at what the house down the street sold for. So like we have one right now, just an example. I gave an offer, it's right here actually. I gave a cash offer at $320,000. Well, a house on that same street just went on the market like 2 days ago for $600,000.
Right.
So we're in the process of discussing like 3 different offers with that seller. One's a subject to, one's the cash offer, et cetera. And his question to me is, well, what about this house that just went on the market for $600,000? My job isn't to argue with him about anything.
Right.
My job is to educate him about why that house in its perfect market condition, being much larger. So I view it the way you view it, which is if I just spend time and educate people, many of them will make good choices. Some of them will choose me. Others will choose choices that don't come to me, and that's okay too.
Right. Yeah, I think it's especially newer wholesalers, but newer flippers and anyone that's going direct to seller. I think it's real uncomfortable. I don't know if it's the industry. I don't know if it's because you don't have confidence in the services that you provide. But I feel like a lot of people are hiding that. Oh, well, let's not tell them that it's worth $250,000. But anybody who is considering selling with or calling my postcard or your postcard or answering a text message, anybody who's really considering selling is already looking at those other options and have figured out a reason why they don't work for them. Nobody
Yep.
thinks about using a wholesaler when they're going to sell their house. Everyone knows you use a real estate agent and you sell it on the open market and you get this amount for it. So if somebody's contacting us, they're not dumb. They know approximate, after repair value. They wouldn't know what that was called, but they know what they're looking for. And I think it discredits the wholesaler when they try to hide that from the
Absolutely.
homeowner.
Yeah. And you don't come across as credible, right? There's credible reasons why in a neighborhood where a house sells for 600,000, I've made an offer of 320,000.
Right.
Right. And I've demonstrated it by data, and I've shown pictures, and I've given, I'm giving them everything. And I think when you do that, whether you do it, like in my case, I did it literally in writing, but if you can demonstrate that in person, you are bringing a lot to the table. And again, if you're selling against the market, as an example, if you're concerned about this person going to a real estate agent, why not directly ask them, why haven't you listed with a real estate agent?
Yeah.
They're going to tell you why they've got you on the phone instead of the real estate agent. So
Right. Yeah.
I think there's just, yeah.
One of the questions that we always ask, well, have you thought about listing it with a real estate agent? And
Absolutely.
everyone says yes, or I don't want to fix it up, or I don't want people. That's one that we get a lot, especially now during COVID.
Yeah.
I don't want people coming in and out of my house all day. Those are real concerns that people have.
Absolutely. We run into that concern a lot.
Yeah.
A lot. The interesting part about that, just for folks who are out there like doing a large amount of wholesaling in their business, we've seen a more willing seller willing to take pictures of their home, willing to give us a video walkthrough, so that we're not even going out to those homes in a lot of cases until we're fully under contract.
Right.
Because they are aware that, they don't want a bunch of people in their home. So that helps. The interesting part, and I know we're not trying to necessarily talk at length about the dynamic between realtors and others in the real estate industry who serve sellers' needs. Often there's some type of tension between investors and realtors. And my point of view is, generally speaking, the client of one is not the client of another. They're not actually in competition with each other. The people who really want the type of help that we provide, if they go to a broker or a realtor, that person may not have the skill set or the services or whatever it is that we bring to the table to really be able to serve that homeowner well. For example, I went and walked through a home yesterday, and as I walked through the house, the ceiling of the home inside, the roof had collapsed. Like, they're living in there, but there's literally a clear tarp over there, like in a big hole in their living room. It's like 6 feet wide.
Wow.
If a real estate agent walks through that home, what the real estate agent is going to tell that homeowner is, hey, you might need to get this fixed before we can do anything. See, that's not something we would ever say to them.
Right.
We'd be like, okay, I understand the condition. Obviously, that's going to affect price, but we can definitely handle that. That's not a problem.
Yeah, absolutely. I think one of the other things that is different between the real estate agent and the investor is sometimes, before COVID, it's sped up a little bit now, but our average days on market for a good house in perfect condition was 74 days. 74 days on market. That was the standard across the entire county. Well, a lot of these people don't have 74 days to wait. So if I can come in and as soon as title clears close on a property, that I am serving, and a real estate agent can't control that.
That's
a
right.
real estate agent is not going to force that closing. They can help, but it really, at the end of the day, most people, and especially if you're getting a loan on your property, you're not closing in 14 days.
Well, yeah. And to that point, here's an interesting dynamic. Again, as someone who's licensed, guess what I'm not allowed to do when I get a property under contract? Call a buyer and encourage them to buy the property.
Right.
If they're represented by someone else, I am not allowed to do that. It's literally not allowed, right? When we get a house under contract in our wholesale world, right? What do immediately? Start calling buyers.
Yeah.
So it's interesting, the exact thing that seller needs, which is they need a buyer, and they need a buyer immediately. A real estate agent really can't do that. Yes, they put it on the MLS, and there's some reach there, but they're not actively calling anybody other than their own clients to come and look at this property.
All right. And I guess I have some other questions because recently my partner got her license, and
Yep.
so how do you navigate the ethical rules of being a realtor and wholesaling and all of these things? What does that look like for you? And is there anything that maybe me and Melissa should be looking out for?
Yeah. So I think the most dangerous place for someone who's licensed, who's also doing wholesale transactions, is this whole ethical duty of disclosure. So obviously, the first thing is when you walk in the door and your real estate agent say, "Hey, I'm legally required to tell you that I'm a licensed real estate agent." Every seller's response, "Okay."
Yeah.
I mean, like my business partner likes to make a statement. If you make a big deal about it, it's a big deal. The converse of that is if you don't make a big deal about it, it's not a big deal. So
Right.
that's the first thing is I don't really understand why agents are concerned about disclosing first the fact that they're a real estate agent, or second, another disclosure that they run into is if you're selling a property that you may have an interest in that property. Just simply disclose it. I mean, it's the simplest thing. So I think first real estate agents get tripped up on simple things, but the more complex things are like do I have an ethical requirement to share with the seller what I think their home is worth? As we talked about, a lot of my approach starts exactly there.
Mhm.
So don't even shy away from it. Just walk in, and this is good advice for whether you're licensed or not. You can walk in the door and start a conversation centered around, I think if you sold your house in the market and waited 72 days, you could sell your home for $240,000.
Right.
Is it valuable to you as a seller to get a little less capital and to get it more quickly? If yes, I'm happy to talk with you about some solutions.
And
So
if not, I'll list it for you.
yeah, well, and you guys have, we have that ability. You guys have that ability. The other thing I would say is we have members of our team. I drive certain parts of our business, but I'm not necessarily the very first person that a seller may speak with.
Mm-hmm.
And so if I'm not the one who's leading that conversation, that may sound something more like, "Hey, here are options if you're interested in that." And if not, by the way, I can get, we have a real estate agent who we work a lot with. I can get him in contact with you if that's interesting. Obviously, that referral is going to come to me, right?
Yeah, well, I would hope so. If it's your
um,
team and your marketing dollars, you probably
Yeah. But I mean, so I think there's a way to manage who actually makes the first contact. I don't feel like there's really that big of a gray area. I don't see it as that big of a stumbling block. I do advise startup investors avoid the license initially, only because I don't think that it serves them all that well. After, you've got a couple transactions under your belt, you've been in the industry, say a year, 18 months, this is something you're passionate about, then make a decision if the license bolts onto your business in an effective way.
Yeah, that's really when we were making that decision, we knew for a fact that both of us didn't need or want to be an agent, but really we were looking at how many leads were coming in that we were unable to monetize, or we were only able to get a small percentage of that if we were to refer them out to other people. And our goal now is to ethically monetize every lead that comes in that we can, right? And
Yep.
and that is one huge way of doing it. And then we're also looking on the back end, the commissions for when we buy and sell and our flips and all that kind of stuff.
Yep.
It's just something that I think if you're just wholesaling, you probably don't need it. It's probably, the only benefit is MLS access, but there's way easier ways to get access to the MLS than having to become an agent. So at what point do you think you would, or how would a new investor know when they're ready for that? You said after they've been in it a while, but
Yeah.
what are the key deciding factors?
Well, here's one. So I calculate that it costs me about $3,000 a year to maintain my license and all of the associated platforms and just everything associated with it. That may be a little bit of a stretch. Maybe it's $2,000. I don't know. Whatever. So if you're just paying one commission a year on $100,000 at 2.5%, 3%, 3.5%, whatever a real estate commission is, you're breaking even. And you're taking on a pretty substantial ethical burden and oversight. By the way, we haven't even talked about oversight, but I've got some interesting stories about how that can interfere. But I don't think that's the place. So I think you have to be at a place where it'll make a substantial contribution to your business from a financial point of view. Again, selecting who in your business is licensed makes a lot of sense. So we know a lot of husband and wife teams who, the husband will have the license and the wife doesn't, or the wife will have the license and the husband doesn't. And that makes a lot of sense to me as well. Generally, I wouldn't have the default, like whoever's leading most of your acquisitions probably isn't the right person to have the license.
Right.
Generally speaking. But I think it's just a matter of, is it worth your time? I hear the sales of the people suggesting, well, I get access to data and stuff like that. With tools like PropStream or Propelio, I'm kind of dismissive of that being that big of a benefit. So I don't know, that's kind of, I would just look at it like, I think there are dramatic things that are happening in my business that I'm not able to do because of it. And I can't find a partner who will fill that in. Because for those out there who are kind of one-man shows and stuff, you can always find an agent who will provide their services at a value to you. And maybe in return, you find some way to serve their business, whether it's passing out their business card or whatever.
Right.
They may not be able to pay a referral fee or anything, but that doesn't mean that you can't have relationships that are mutually beneficial for both of you.
Right. I think we talk about it sometimes as a marketing fee instead of a referral fee and that kind of stuff. Check with your local.
Check with your state. Yeah. Check with your state. I think there's ways to do a couple of different things.
Right. Absolutely. Well, Ed, is there anything else you think that my listeners, like the number one golden nugget that you like to share with everybody that you can? What is that?
We started with creative financing, and it's really that. The two things that'll completely unlock a investor's business is learning creative financing strategies and talking to people to place private money.
Yeah.
And if you can begin to have those two discussions, your business is going to dramatically turn a corner. Especially kind of considering where, there will be some volatility in some markets in the coming year.
Mm-hmm.
It may not be, as nationally dramatic as, like the 08, 09s, whatever, but some specific markets will be more impacted than others. And that has some things to do with like their local regulations, employment in those areas, things like that. And as we learn specifically, like the subject to transaction this coming year, as we learn how to use other people's private money to be placed in those transactions, I think it's going to unlock a lot of abilities. So, you can do these on $600,000 homes. You can do this on $30,000 homes. There's not really any limit to what it is. You're also not constrained by a credit score. You don't have to display necessarily a proof of funds in most cases. Mm-hmm. In fact, I just today was on the phone with an agent who asked me for a proof of funds, and I laughed at him. I said, "Man, you're the first person in about 6 or 8 months who's actually asking me for that." We don't provide them, so it's irrelevant. But I literally laughed at him and told him that. I said, "No, man. Look, if my reputation isn't enough, if all the people who we've served, if all the communities we've constructed aren't enough, then I'm okay. It's fine."
Yeah, that will pass. I got 6 others that I got to review in the next 30 minutes anyway.
Honestly, so I have a little notepad here next to my desk, and I have, we're chasing a portfolio, and I'm supposed to have called this guy back like 2 days ago, and we just haven't been able to get to it yet. So I've got to call him this afternoon as soon as I'm off this call.
Well, I think you provide a lot of expertise in a lot of different aspects. I really appreciate you, Ed, and all the time that you've taken with me individually. And I think today there was a lot of good information dropped. If our audience was looking to find you and connect with you, where do you think that they should go and do that?
Yeah, so we're on socials. Obviously, they can find my personal socials just under Ed Peugh. We're our CLT Buyers brands. So we have all of the social handles for that. So it's the letters Charlie Lima Tango and the word buyers. So CLT Buyers. Those are probably the best 2 places to really find us. I would mention, if anyone's local in the Charlotte market, we run a local meetup, and so they can find that. It's called the Exchange Real Estate Networking Meetup. Our next one is going to be in January. And we also run a program locally. It's called Office Hours. And what that is every Thursday afternoon from 1 to 5 p.m., we open up our office for anybody in the market to come in and use all of the resources we have available. They can use any of our contracts. They can use any of our prop stream. You know, if we need to look, they need to look over our shoulder and look at something there. Just whatever the tool is that they need, we're ready to help and engage and build a more vibrant, more consistent, more effective and well-informed community around us. Like we just we want only the best operating in our market. And so we really want to encourage those who want to find the right way to do the deals.
That's awesome, man. I've never heard of that before, but I think that's a phenomenal value that so many young investors should be beating your door down. Like they should be the first ones in and the last one to leave every week.
All right. Can I tell you one thing about that? Just you and I are buddies, so I feel comfortable. The one thing that gets me, JD, is this. So we have a lot of people who show up, right? And they ask questions and they go to work and all that. But sometimes we get hit like, hey, Ed, you know, you get hit like this too, I'm sure, in your market. Hey, JD, wanted to grab your mind. Can I buy you a coffee and just pick your brain real quick? Right? Unfortunately, like that doesn't serve our business very effectively. So what we do when we get those is say to the people, hey, I can't make that happen, but just stop by my office every Thursday afternoon from 1 to 5 p.m. and I will help you and anybody else who's here understand whatever question you have. No questions off limits. Last week we were joking, there's probably like 3 things across our whole business that we would just consider to be a little proprietary. We wouldn't talk about that. And then when we got asked what those 3 things were, we couldn't even come up with 3 of them. So, so I invite the person to like come down to our office hours thing. And then I get a text from them like Thursday evening or Friday morning. And it's like, oh, wasn't able to make it out. Do you have time to jump on the phone? What am I supposed to, I mean, you couldn't, the door was open. All you had to do was walk through my door between 1 and 5 p.m. and I'm happy to help you. But at the end of the day, people need to do just the most minimum things to serve themselves to take advantage of the resources that are out there, I guess.
Yeah, absolutely. Well, it's definitely not a good return on your time invested to answer the same questions to 500 different people, 500 different times. I completely understand that. I think the type of people who will succeed in this business are the kind that will make that effort to come to the office and check things out. And the other ones you'd be wasting your time with anyway.
That's exactly how we feel.
Right. Yep. Well, awesome. Ed, thank you so much. Like I said, you're a friend and a mentor, and we really appreciate our relationship. So I look forward to talking to you again real soon.
Thanks for all your guidance, JD. I appreciate you so much, man.
Hoorah.
Thank you for listening to the Real Estate Jam.
Thank you.
Thank you. Thank you. Thank you. Thank you for all you do.
We hope you enjoyed today's episode. For more information and updates, check out our website, shorefrontrestorations.com, or find us on Instagram, Facebook, and LinkedIn at Shorefront Restorations. If you have any questions, feel free to drop us an email at info@shorefrontrestorations.com. See you next episode.